Hello there.
Cocoa doodle doo, it's time to wake up and start investing. It's fun, and unless you're speculating like me, good for your financial health. It's December and it's time to start looking at some shopping stocks. Let's invest in cocoa. Welcome to the episode. Let's catch up on how our portfolios have been doing, battle some cocoa stocks against each other. I'm the Gentleman Investor. This is episode 14. Let's invest. As always, we're going to reveal who won last week's battle. We're going to check up on our portfolios and we're going to battle two stocks against each other. Without further delay, let's get underway. Last week saw the coffee companies battling against each other, and the winner was Black Rifle Coffee. Now, I'll admit this is a fairly speculative stock, so I'll be very interested to keep an eye on it over the next few years. Hopefully it'll be the rocket that takes us to the moon, and not the one company that just drives our stock into the ground. By way of reminder, it's £25 into each portfolio per week. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. Tate and Lyle were our winners a couple of weeks ago, so let's find out how they've got on and the rest of the portfolio too.
So this is how our portfolios have looked over the last 7 days. Last week was a lot more green and healthier than this week, a couple of reds there, but on each occasion the Battle Royale outperforming the benchmark. Let's delve into those stats a little bit more. The Vanguard FTSE All World was down 0.5% over the last 7 days, and somehow the Battle Royale managed to be up 1.1%, so great week for the Battle Royale. We've now got 12 holdings, and if we sort them by their 7-day performance, we'll see that Adidas of all stocks was the big winner, 4.1% up. Our biggest loser was YouGov, with not applicable. I don't know what that means. That can't be good. Loads of green over the last week, only 3 in the red. Overall, if we have a quick look, it tells a different story. Tesla, right at the top, 58% total return, doing amazing work for us over there. Nickel, you'll be unsurprised to hear if you've been listening for the last few weeks, up 25%. The big loser, B&M, and Money Supermarket. But we're doing well, we're performing well, life is good. Now let's take a gander at how much money the income generator is making for us. We're up to £9.19 in annual dividends, the next payment being £1.78. That compares with £1.63 a couple of weeks ago and £1.61, which was £1.48 a couple of weeks ago. So the next payment up to £3.39, which, as I say, was £3.11 previously. So ticking over. And finally, this is how we've done overall. The Battle Royale up 7.87% overall time. We've invested £300 and we're now up to 320. Very happy with that. Our benchmark up to 314, having been at 290 last week. All doing very well, very pleased, and going to carry on going.
3, 2, 1, fight.
Last week, I had a great time on Trading 212, discussing our companies with my new friends, Vampy and Stevens. Stevens had some very good suggestions about cocoa companies, so he's definitely crazy for cocoa. Let's have a look and see if we can find something to invest in too.
So when I first started looking at cocoa stocks, I wanted to get a nice ETF to buy the entire market so that when the cocoa industry rose, we would be guaranteed to rise in value with it. However, unfortunately, Simply Wall Street only likes to pick stocks and it doesn't like to find ETFs. And the name of the game is that we can add these stocks to Simply Wall Street to track it every week and see how our portfolio does. So none of that. We're limited to stocks. And here are 3 cocoa companies I found. There is also, of course, Nestle, but we covered that last week and I'm not convinced about the long-term strength of that company, despite the fact that it seems quite undervalued and is such a well-known brand. So we're down to 3. My favorite chocolate brand that to eat personally, Lindt, and then we've also got Hershey's and Mondelez. If you have a look at the 3 portfolios, they don't have a huge amount in the way of future growth. They don't particularly have massive dividends, although they are dividend payers, and they're not massive growth stocks either. However, Hershey's is apparently 39.9% undervalue and Mondelez 55%. And we all know I love a deal. However, that's not all there is to it. You've got to look at future growth, and Mondelez has fantastic future growth at 10.56%, whilst Lindt is also forecast to grow quite nicely at 6.36%. Is that fast enough? It's difficult to tell, but if you have a look at Lindt, its growth is at 6.4%, is higher than the industry average, so at 5.9%. So that does make it a little bit more tempting. If we have a look at the future growth of Mondelez here, there it says the growth rate of 10.6%. Of course, these are all just estimates and projections. The EPS is 10.8, and Hershey, there it is, 39.9% undervalued. Its future growth slightly lower than the other two. And so on that basis, having had a look at them and considering the levels of debt as well, I'm actually going to eliminate Hershey's, even though it does have the slightly more yellow and better coloured snowflake, in favour of, surprisingly, Lindt, and not surprising, Mondelez, who is, I think, ahead at this point. But let's take a little look at the two companies in more detail and see if that initial prognosis holds true. Here is Mondelez, and if you don't recognize the name, you will definitely recognize the chocolate. They do, of course, Cadbury, so everybody will be familiar with that, and of course Oreo as well. They also do Milka, which not too many people might know about, but I've got to say, we certainly love them in this household. It's a firm favourite. And for Lindt, I only have one thing to show you. If you haven't tried one of these Lindt balls, they are absolutely amazing. And I need to say no more about the company. The fact that everybody knows Lindt probably helps as well. But man, they make good chocolate.
Now that that's out of the way, let's take a look at and compare their high-level metrics.
Compared side by side is made a little bit more difficult by the fact that they're both on different stock exchanges. Lindt, you might be unsurprised to hear, is on the Swiss stock exchange. All the metrics there in Swiss francs, and Mondelez is in the US on the NASDAQ, measured in dollars. If you have a look, I've included both of their 5-year stock charts, neither particularly impressive or much to write home about, fairly stable. However, they do pay dividends, and the cocoa market is hopefully on the rise. So could you even consider these defensive stocks? We will see. Other things to note are the PE ratios. Lindt sitting at a low 3.46, tiny in fact. Mondelez up at 22.79. Is that anything to do with the NASDAQ being so massively highly valued at the moment? That is a really good question, and one I don't know the answer to. I think it's very difficult to pick between these stocks because Lindt is the slightly worse performer, if you can say that. However, it is at a much lower price, although apparently Mondelez is undervalued and has good growth for the future, but then again, so does Lindt. So this one is going to go right down to the wire.
So there you have it. Who should we invest in? Please let me know in the comments. However, I think we should be investing in... Well, what do you think? Do you agree with that assessment? Would you be investing in any of these stocks? I'd love to hear from you in the comments. And otherwise, thank you so much for watching another episode, and I look forward to seeing you again next week. Best of luck for your week in the stock market and for a happy December.
Goodbye.